Hello and welcome to Business Incorporated live on Channels Television. Well, it's the midweek hump trade right here in Lagos, Nigeria. Here's what's coming up. And Ghana's finance minister confirms Ghana's missed key performance indicators required for the upcoming fourth review of its International Monetary Fund supported program. And we discuss ways to combat counterfeiting on the African continent as fake drugs and goods flood markets. Plus, investors brace for U.S. inflation data for February to get cues on rate expectations. And it's great to have you. I'm Ladi Williams. Let's get a check on what's playing now with the markets that we track now. Starting with metals, you see gold held steady ahead of a key U.S. inflation data that could help gauge the Federal Reserve's interest rate path amid trade tensions, economic slowdown, fears there about recession. That's a dreaded R word right there that's flying around for the U.S. economy. Spot gold, that's unchanged, $2,916. U.S. Gold futures, 0.1% down, $2,922. Maybe we might restart that move to the $3,000 psychological level. We'll see if that plays out. Spot silver, down 0.5%, $32.76 per ounce. Platinum, on the flip side, that's up 0.4%. Palladium down 0.6%. Let's get a check on what's playing out with oil now. See oil prices at the edge up earlier today, helped by a weaker dollar, but mounting fears of a U.S. economic slowdown and the impact of the tariffs, that's still capping the gains. You see there, $70.29 a barrel, up 1.04%. That's for Brent after breaching that $70 psychological level. For the U.S. grade, that's up 1.10%, $66.98 a barrel. Still trying to hold up and maybe get back to $70 at this point. To other stories now, Nigeria's average daily crude oil production is once again fallen below its OPEC quota of 1.5 million barrels per day. According to the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, production dropped to approximately 1.47 million barrels per day in February from 1.54 million barrels per day in January. This decline represents a daily loss of 70,000 barrels, totaling around 2.1 million barrels for the month, while Nigeria surpassed its OPEC quota by over 30,000 barrels in January, earning praise for its progress towards the 2.06 million barrels per day target. That's the latest figures, highlight that setback there. Additionally, combined oil production, that's crude and condensate, also decreased from 1.78 million barrels per day in January to 1.67 million barrels per day in February. And the Standards Organization of Nigeria has intensified efforts to rid the country of substandard products and boost confidence in locally produced goods. The organization organized a forum with manufacturers to explain how the program will work effectively. Take a listen.
With the growing need to improve non-oil exports comes the focus on manufacturers more than ever before.
Certification.
For this meeting, the Standards Organization of Nigeria is prioritizing them in their effort to strengthen mandatory conformity assessment program. The scheme, which is to ensure that Nigeria-made products are competitive at the global market and are being sold or exported, is the focus here.
How do we conserve the forest or the foreign exchange we have? How do we develop the country? You can see from the American perspective, like I was discussing with the Director General, every society, every organization every country is trying to protect its own. Because we know that you are the backbone for any successful any economic development.
And standards is one of it.
On his part, the Director General of MAN, Segun Ajayi Kadri, believes that manufacturers need acceptability so that smaller countries on the continent will not overtake the country. And this starts with perception.
Deepening the confidence that we have in our standards. For us to be able to proudly demonstrate that our products are indeed up to standard. Even within Nigeria, we have skeptics who believe that manufacturers are not making quality products. Many of them often say that foreign products are far more qualitative and more effective, efficacious in terms of how they deal with what they are intended to do. But we must reaffirm our faith in our regulatory agencies. And I believe that it is in order to give us credibility that Sun is rebranding, that Sun itself is ensuring that we carry a logo that is typical of the quality of our products.
Both Sun and Man believe that more meetings like this and necessary changes adopted would help consumers solve the challenge faced in buying substandard products and boost confidence on Nigerian brands.
All right, now to our first conversation. The illicit economy, particularly the trade in counterfeit goods, is a growing concern in many regions of the world, with Africa being no exception. Counterfeit goods ranging from medicines and electronics to luxury goods and food products are increasingly flooding markets across the continent. This underground economy poses severe risk to public health, safety, and the economic stability of African nations. The presence of counterfeit products often leads to loss of consumer confidence, harm to businesses, and a drain on government resources. As a result, combating counterfeit goods and reducing their spread is crucial for the long-term growth and stability of African economies. Well, joining us to unpack this now, we have Ashifi Gogo, who's the CEO of Sproxil, joining me via Zoom. Great to have you on the show.
Great to be on the show. Thank you for inviting us.
Right. So, with the technology, with the amount of technology and technological advancement, we've had so far in the world, it seems combating counterfeit products is still a big issue now. And, some would wonder that, producing these goods are not cheap, but you still have that striving counterfeit market. Talk to me about the drivers right now. Is it that it's just so profitable, to make these counterfeit products?
Yes, it's a combination of the amount of profit that one stands to make, as well as the risk profile, what punishment might come if you're caught, right? And so with counterfeit, some studies have shown that the profit that you can make rivals the profit you can make from the narcotics industry. And then the punishment that you get doesn't get to the same level as what you would get if you were caught producing narcotics, right? So it ends up being a bit of a win-win for people who are thinking about getting into that type of practice.
And looking at the regions now where counterfeits thrive, which regions would you say are the most impacted on the continent?
Well, you can go back to the fundamentals, right? So you're looking for places where you could sell without being caught. And if you're caught, you don't get punished a lot, right? And if you look at that profile and look at countries that need a little bit extra investment in law enforcement, in the legal system, in pharmacovigilance and enforcement, those are the places where counterfeiters effectively can get away more easily. And those are the places that you'll find, by human nature, people gravitating towards. So they tend to be countries where there's a little bit more investment needed in policing and enforcement, in the legal system. And that's just the way I believe the industry thinks about this.
Right, and I want to believe if your business and your product is being counterfeited and selling alongside your product, that would definitely impact your business negatively. But we also have on the other side, the consumers are also affected, depending on what type of good that is. But we have consumers that don't mind counterfeit products, because it's cheaper and maybe looks like the real thing.
Yes, so there's different kinds of counterfeits, right? There are counterfeits where if you buy the fake product and use it, you stand to face physical harm. There, generally, you would not find consumers willing to harm themselves. But there are also some counterfeits like luxury goods, where, if you get caught with a fake luxury bag, it's not like the end of the world. Your health is not going to plummet. Maybe your social image might take a hit. But I see from our 15 years of experience in this space that there's more interest from the consumer to collude with the counterfeiter by supporting them, by buying the fakes, when the consumer doesn't stand to be physically harmed. And in some cases, even when there's a risk that they'll lose money, there's a little bit more tolerance. When people know that this is a product that could harm their health, that's usually when people do not take compromises.
Right. And talking about health at this point, definitely you wouldn't want a fake drug, at this point. But that is still a major issue at this point. It's hard to spot the fake, from the original when it comes to medicines and drugs. But what kind of progress is being made, so far, in helping consumers, identify fake and original drugs?
Yeah, that's a very good question. And in 2010, we were very fortunate to launch with NAFDAC the mobile authentication service, which is come to be known as MAS. These are the scratch-off labels that you might see on medicines, where there's a unique number that you can text the code to and get a response saying if it's authentic or fake. It's free in Nigeria. It's been free for the last 15 years. There's over 18 million Nigerians that have used this service to identify if the product is suspicious or authentic. And there's about 5 billion of these codes that we've issued in the last 15 years. So there are ways to address this issue. We've also been working with NAFDAC where if someone scratches the label and sends the code to us and it turns out the number is inauthentic, which our system is designed to catch, we can then call them and ask them, where is the shop? Which shop did you buy it from? Where is it located? Give us directions, describe the shop owner, and then we file a brief via email and send it to NAFDAC so that NAFDAC can use this information in their enforcement activity as well.
Right. And, when I'm buying medicines too, I notice those numbers, but I feel I'm guilty of not checking. How much do you think, consumers really check, in Nigeria do they really use those codes?
Yes, they do. As I mentioned, about 18 million Nigerians have used it before, 35 million globally. What usually happens is, as humans who are creatures of habit, if you have a shop that you've been buying from for a long time and you have not felt any bad effects from the medicine that you're buying, you're less inclined to check because you don't worry as much, right? So we find out that people who are checking are people often on chronic medication where they have to buy frequently, and one bad batch can spell quite a disaster for them. People who are buying from locations that are not their usual point of purchase. So you don't trust the shop, you're traveling, you just happen to need an anti-malarial, you go into a shop, you've never been there before, you would usually check, and so on. So there are cases where the risk profile that the consumer is in urges them to check. But often when people are buying from the same shop and they've been shopping there for the last 25 years, and they know the children of the pharmacist and all of that, they tend not to feel like they need to check, even though we advise that you never know, right? Even pharmacists don't always know what they're buying. So it's always a good idea to check.
Right, definitely. I will be checking more, going forward, because when you see a good-looking pharmacy, you'd expect whatever is in there would be, original, but I guess you still need to check regardless. But talk to me about the role, like international trade agreements and collaborations play in, curbing the flow of counterfeit goods into, African markets.
Yeah, those types of arrangements are key because intelligence sharing, information sharing, these are things that help give the regulators who are enforcing the ability to stay ahead of the counterfeiters, right? If there's intelligence that there's an unusually large shipment that is headed to Nigeria from a manufacturer that doesn't have a history of making such production volume targets, and that's something that can be sent over to NAFDAC for them to keep their eyes peeled at the ports And as they're sampling, right, you can't check every single medicine that comes to the port, but as they're sampling, maybe they pay a little bit extra attention to this batch because there's something unusual about it, right? So those kinds of collaborations are key. Counterfeits don't know borders; they don't need passports to move around, it actually ends up being the case that the folks who are farther away from the harm may not care as much about the harm that's inflicted, right? If you're sitting in an overseas country and you ship the products, you usually have no idea what's going to happen to the end beneficiaries. And if you don't even follow the news, you probably don't even care.
Right, and definitely, such people, they just care about the profit, that they make, and they're not worried, about the impact on the lives of people that consume these products. But, talk to me about the technological trends you're seeing, technological advancement or innovations you're seeing right now, and, what you're expecting, will come up in this battle in combating, fake and illicit drugs and other goods.
Yeah, that's a very good question. So technology is always moving forward. There's AI now that's doing a great job, with automation. What I would like to do is just let's see where we've come from, right? When MAS launched in 2010, we had about a 1 in 5 chance of buying a fake in Nigeria. This is according to the NAFDAC DG's comments at a recent traceability conference. And after about 9 to 10 years, when NAFDAC measured again, it became a 1 in 77 chance, right? So in the span of about 10 years, the odds of buying a fake, it went from 1 in 5 to 1 in 77, right? So that's remarkable progress with some technology-aided tools. The next frontier is to look at full supply chain visibility. So MAS helps you with looking at consumers who are checking and verifying, but there's no MAS for pharmacists, right? There's no MAS for the wholesaler. There's no MAS for the warehouse. The check is done by the consumer, but not everyone up the stream. And so with Global Standards 1, right, GS1 is the standards for barcodes that you can use for traceability. This is something that NAFDAC is embracing, which we fully support, that would give more protection for everyone in the chain, right? So the wholesaler that's getting the medicine can feel comfortable. The retailer, the pharmacist getting the medicine can feel comfortable that this came from the right supplier, from the right factory. And then when they give it to the consumer, then that kind of confidence flows through for the consumer to be able to buy. And even if they don't check, there'll be just higher levels of assurance that they are getting something authentic.
Right. I guess everyone in the value chain gets checked, at this point. And we're hoping we can finally, win this battle. So whatever you get, whatever goods or products you're able to buy, you're actually buying the right thing. Well, thank you so much. That was Ashifi Gogo, the CEO at Sproxil. Thank you for sharing your wealth of knowledge with us.
Thank you for having us.
All right, let's get to other stories now. We see the federal government of Nigeria has increased its bond listings by adding 910.3 million units of its existing February 2025 bonds on the Nigerian Exchange Limited. According to a statement from the NGX, the supplementary listings include 305.36 million units of 19.30% FJN April 2029 bonds and a 605.03 million units of 18.50% FJN February 2031 bonds. FJN bonds are debt instruments issued by the government to fund infrastructure projects and other developmental initiatives. With this new issuance, the total outstanding units for the 19.30% FJN April 2029 bonds rose from 463.16 million to 768 million units. All right, let's get to our next conversation now. In today's fast-paced, digitally driven world, we see businesses must adapt, to evolving consumer behaviors and market trends to stay competitive. Online marketing has become a cornerstone for growth, enabling companies to reach wider audiences and build meaningful connections with customers. But what exactly makes such a vital tool that's digital marketing? What makes it such a vital tool for business to expand their customer base. Well, joining us to discuss, we have Ugochi Morono. She's a digital marketing specialist. Great to have you on the show.
Thank you for having me. Good morning, everyone.
So I guess, at this point, everyone's marketing online, from what I see, scouring through social media. Talk to me about the importance, of marketing, marketing online for businesses, that are looking to grow their customer base. Because we're seeing a lot of, users or businesses, trying to sell most of those products online. But there's something about, expanding your customer base. How can you do that with online marketing?
Okay, thank you. That's a lovely question. First of all, my observation is a lot of people now are budding entrepreneurs and eager to sell their wares and products online, and as regard trying to change the narrative from selling from their stores. They realize that selling online, they reach a wider variation and range of people, and then online digital marketing helps this happen, and it's actually cheaper than the traditional way of advertising, which is TV, adverts, and so on. So it's actually a beautiful way of getting themselves out there and getting their products out there as well. So that's our observation.
Right, and I've also observed too that most of these online businesses, sometimes you'd want to also see some kind of physical store, when you're trying to buy, So most of them always say, oh, we're an online store, we don't have, any physical office or anything like that. Is that a plus or a negative for business?
Well, there are two ways to look at it. Sometimes you might have the physical store, but going by what obtains in Nigeria, sometimes when you have the physical store, you always have the burden of your rent, overheads, and all of that. So I think what most people have started doing now is creating more personalized experience with their customers. They introduce websites and they introduce like more personal, like maybe giving out their WhatsApp numbers, making it more relatable, always creating a sense of community. So if you notice, like within the last 8 years, initially when people started selling on Instagram, for instance, most people are always skeptical. And then to piggyback on what the former speaker talked about, he mentioned counterfeit luxury goods. If you notice across Instagram, there's a rise of people selling luxury handbags online. And the truth is, some of them are fake, as in counterfeit, and some are authentic. And the way you get the bridge connecting the authentic luxury handbags to the customers is through online marketing. So most of the clients I had initially had this issue. After purchasing these luxury handbags, most times they were actually thrifted. And then if you check on the global scale, there are actually some large foreign websites, both in America and both in the UK, that sell these same luxury vintage handbags. So they actually were able to bypass the whole have a physical store situation to having a website and also having Instagram and also having other avenues of social media in collaboration with, of course, DHL, UPS to have seamless deliveries and also good payment systems such as Paystack and all of that. So that has been able to bridge this gap. And then I think over the years, they've been able to build that trust whereby people see a page, check the reviews, check, maybe go to the followers, check to see if they have mutual followers, ask those people, oh, have you bought from this person? What was your experience? So that helps the seller via word of mouth to sell more. And also adding the online digital marketing and advertising, you reach a wider variation of people. I find out that most of my clients are having buyers from South Africa, America, UK, all around the world, to the point that it became an issue of how do they send money to you, because some of them didn't have DOM accounts at the time. Some of them didn't know about Paystack, Payoneer, and all of that. So I had to bridge that gap, introduce them, set up their accounts, and so on and so forth. So after that, it was just a beautiful experience and smooth sailing from then on.
Right. And, with most of these online vendors, they, come up with different ways to sell their products at this time. You see some of them dancing, social media and all of that. Talk to me about the most effective digital marketing strategies for, attracting more customers.
The one I've observed most is usually short form videos, because most people have short attention span these days. They just want to just see it quickly and get to the point and all of that, so they can move on to other things. So usually short videos, and then again, to piggyback on that, most times they now move on to TikTok and have live shows whereby they hold the handbags or hold the item, demonstrate how it's used, and get people to bid for the bag or ask for the bag by the live video and all of that. So it's quite interactive. You get to see the person selling to you. You see other people in the community also commenting and requesting for items and all that. So it's quite engaging and quite interesting. It was announced ahead of time, so people can log.
And definitely, marketing online is not free and it's not cheap. Most of the time, you have to spend a little money. But how can a small business with, limited budget compete, effectively in that digital space with, larger competition, other big companies? How can the little guy get to the big guy's level in that space?
Okay, that's a lovely question. First of all, they can adopt free SEO marketing, also get on social media, link their TikTok and Instagram, and also to Facebook. And most importantly, also join in Facebook communities that sell or market, have the same product as them. It also builds trust and relatability. And apart from that, most importantly, word of mouth. When the first person has a good review and experience, you encourage them to drop reviews either on your Instagram page, TikTok page, or your website under the item. And also being open to interact with people, and also having excellent customer service, that also helps. Because the truth is, nobody, even if your product is very good, nobody wants to buy from someone that is not nice or pleasant and all of that. And also making sure your customers have a very seamless experience. One issue that came to mind, I think one of my clients had issues selling to people in South Africa because they were not comfortable buying from her because they didn't know who she was. It was, of course, in Nigeria where they felt wasn't traceable. They didn't know who she was. Like you said, no physical store. So what I advised her to do was to ship the items to a shipper. Luckily, she found a Nigerian shipper in South Africa. She shipped it to the shipper and told them, look, when you go to pick up, you pay the shipper. And that was what she did. And after the first time, since then, they were now comfortable paying her directly. So those are little ways you build trust and also bridge the gap of distance and unfamiliarity.
Right. Building trust is key, in this online space, because I always find it hard, paying first. When I find something I like on, on Instagram, I always tell them, why don't you just send the product over, then I'll pay on delivery and all of that. But they're also scared of sending it over. So I guess we have to find trust, somehow in this space. But thank you so much. It was great having your perspective, Ugochi Marion, which is a digital marketing specialist. Thank you so much for coming on today.
Thank you.
All right, we'll take a break now. When we come back, we'll find out what's playing out with most of the markets that we track. That's in a moment. Just stay with us. All right, on to the markets now. To get a check on how your money is performing, we have Willie Bond with the details.
Hey, Laddie, I was listening to your conversation earlier. You're talking about trust between, small businesses and the customers. And, find our middle ground to have a compromise. We say, oh, I have this product. I want to buy it, but could you let me have it and I'll pay on delivery? Right. But luckily, the SEC and the NGX have built that trust around, so you don't have to worry about that at the NGX.
Exactly. Or when you're trading I know you bought this outfit online that you're wearing right now on Instagram, I'm sure.
Please, you don't want to know where I get my outfits.
Maybe. Yeah.
So let's, see how major equities we track in Africa performed at intraday. They were mostly in green territory. Nigeria's NGX was flat at intraday, although in positive territory, 0.01%. We're still holding on to the 106,000 level, and this was because of gains we saw in UBA, we saw gains in GTCO, we also saw gains in MTN Nigeria, and this knocked out the losses seen in Dangote Sugar, Access Holdings, and both of them are being in the red for second day running now. This is 2-day running. We want to know what's happening for that stock. We'll find out later. Now, in GSC South Africa, that's the stock market there. It was positive at intraday, 0.21%. And let's see how Egypt performed at intraday. It was up 0.51%. If we look at that very quickly, Kenya closed yesterday's trading, that's Tuesday's trading, in negative territory. See, 1.14% down. But now let's dive deeper into the activities at the NGX. We saw that major drop yesterday at the NGX, 0.43% down, and that's about 285 billion naira loss. And this comes after the market closed slightly up by 0.08% on Monday. Let's bring in Abdurrashid Momo, trader at TRW Stockbrokers. Good afternoon, Abdurrashid. Can you explain the jitters we're seeing at the equities market?
Excuse me, I didn't hear you.
I was asking,
Hello?
can you explain?
Can you hear me?
Yes, I can hear you loud and clear, Abdurrashid. I was asking, can you explain the jitters that we're seeing at the equities market? Can you hear me?
Oh, let me tell you. I can hear you clearly. Can you hear me?
Yes, I can.
Loud and clear. Hello?
Go ahead,
Okay.
go ahead.
Let's look at, before I start, let's normally look at the history of the market. The market has been in a corrective mode since we're talking about since February. In fact, virtually on Valentine's Day, the market started taking correction. And so far, what we are seeing now, it's market seems to be consolidating. For the past 5 days, the market has been range bound within a specified period of about 106,000 points, or about 106,500, about 106,850. So that's what the market has been doing. We did see a loss yesterday when market came down. I think market lost about 300 points. But as we speak, the market is just marginally up for now. I would like to say something about the market. And one thing is that if we compare the index this year and last year, it's like the same story, the same script is being written. The market actually peaked in the period of February, and after that, we didn't see any more rallies again until when the earnings started coming in, the dividend payout. Perhaps that will be what will trigger next rally for the market. As it is, it's just going to be flat within this certain range for now.
Are you sure that we're going to see that trigger? Because these earnings have been coming in, but we've not seen investors really take that bite, like, oh.
No, we are not. The main ones are from the banks. The main ones are from the banks. Because, yes, why the banks have been one of the great hits is because most of the rights issues and public offers have been created into the CSCS, so people are beginning to sell. And if you notice, most of the offers and which these banks came out, and compared to current market prices, you can see that there's already profits. They've already profits from when they bought and with current market price. So that's why you've been seeing a lot of sales in mostly the banking sector. But I know with their year end coming up, I know the dividends might be good, but as I said, sometimes most risks must have been priced in. But as in the market, we always tell people we have two players, the investors and the traders. Some people likely, the dividends are going to come from the banking sector, is likely going to help the market in the next few months to come.
Okay, we know that investors and traders, you mentioned, have been, checking out the resistance and the resistance levels to be able to say, the support and resistance level to be able to say, oh, where can I trade? How can I make money from the market, even if it's in a correction mode? Where would you say now the market is? Are we at the resistance point now? Because 106 seems to be the number that doesn't want to go down.
There are two scenarios. The peak of last year, when the market peak last year was 106,087, right? And the market must not drop below that line, because that was for every support we have a resistance. For every resistance, there must be support. And I've drawn my trend line. The market is, in fact, what you are seeing now is that the market is at the edge of a cliff. We don't expect too much drop as we speak. If market goes below that, then that means we're likely to go back to about 105 to about 100,000 points. But I don't see that coming anytime soon.
Okay, so how do you see the market closing today, in the green, or will there be a reversal since we are marginally or slightly up
it's
now?
Still, it's down as we speak now. It's been sitting between a marginal about 0.02% down and 0.202% up. As I'm speaking to you now, it's down by 0.02. That's about 23.65 points change.
So we're definitely seeing a red close. That's what you're telling us, Mr. Abdurrashid.
Yes, it's close, but it's not going to be major. Any major drop now is likely to trigger the index down again. The market is at a cliff as we speak. We need to hold. We need to defend this territory. That's the word to say. We need to defend that line. You know how it is when people start selling. If you like last week, when the market was dropping, it got to an extent everybody started selling. But as it is, we always try to buy in weakness and sell in strength. For the short term, the market is doing lower lows. But in the mid-term, the market is still intact. But for this current line, we need to protect it. Or else it's going to be a more trend to the downside.
Well, just very quickly before I let you go, could you just tell us what's happening with Dangote Sugar? Is there profit taking going on, or is there some news in the market that investors say, no, I need to pull out now or never?
Did you say Dangote
Sugar? Yes.
Yeah, okay. Dangote Sugar announced the result wasn't too good. No dividend. Well, if it was a negative report. But technically, sorry, I always want to use data. Technically, Dangote is one stock I think people need to hold for the long term, because the trend I'm seeing in Dangote likely might be, those last year or 2 years, we were supposed to do a merger with NASCON and everything. I think it went as high as 80 something naira. That was last year. It went about 80 something naira, and the stock is currently doing. So if we look at it, Dangote is forming a curve to the upside, despite current correction. So technically, I still see Dangote going as, if it breaks about 44, I'm seeing Dangote going to get to about 47 to 51 naira at the end of the day. So I want to notice that it's on the downside, it's actually consolidating, but there's presence of volume.
Okay.
So there's some investors actually watching this stock.
Okay.
There's presence of volume Dangote being traded.
I know you're going into your TA now, but no, we'll have time to do more of that some other time. Thank you so much, Mr. Abdurrashid Momo, for your time. Equity trader at TLW Stockbrokers. So now let's see how markets in the Middle East performed that intraday, mostly positive. We see Dubai up 0.47%, Abu Dhabi 0.13%, flipped very quickly, still within the region. Saudi and Qatari indexes were in opposite directions, 0.4% and 0.44%. Qatari index was down 0.44%. Let's see U.S. markets now. It edged higher in early trade today as investors reacted to the new 25% tariffs on steel and aluminum imports. Futures on the Dow Jones rose 0.4%. We see S&P futures also up 0.59% and Nasdaq futures 0.69%. And this comes after a volatile trading session that saw the Dow drop nearly 480 points. Now, President Trump initially planned to double tariffs on Canadian steel and aluminum to 50%, but later reversed course after Ontario paused its electricity surcharge on the U.S. exports. Now, despite this, the 25% tariff still takes effect today, Wednesday, keeping trades tensions in focus. Now, let's see how markets close Tuesday in response. Let's see how markets close Tuesday in response to these announcements. Our correspondent Mario Bird brings those highlights.
The U.S. stock market had a whiplash of a day on Tuesday, as the Dow Jones was down at 1.1%. The S&P 500 almost had to do a correction, but it was down at 0.8%. And the heavy tech NASDAQ almost was able to close with a win, but just before the bell closed, it dropped to 0.2% down. It is clear that many investors were watching to see how President Trump was going to respond to the potential tariff war between the U.S. and Canada. Before the bell closed, it appeared as if the president was going to have a 50% tariffs on Canada starting on Wednesday. But after the bell closed, the president did decide to move away from a 50% tariff as of Wednesday. These trade wars have had quite an impact on the U.S. stock market. Investors are continuing to watch to see what will be next, but they are hopeful to see some recovery in the next few days.
Thank you, Mario. Now let's delve into Asia markets. Let's see how they perform. Let's have that on the screen very quickly. We see the Nikkei up 0.07%, and investors are also still reacting to the uncertainty over U.S. tariffs and recession fears there. We saw Japan's data coming in that country there, and that's probably boosting that index. Kospi index in South Korea up 1.47%, and we see the Hang Seng in China 0.76% down. Mainland China, however, we see it also in the red 0.23%, and the Nifty 50 down 0.12%. We see India's inflation rate dropping more than expected to 3.61% in February, and this is because of lower food prices, and this is the lowest in 7 months, and that country hopefully will see a reversal in trading activities, maybe a green close. I'm talking about inflation data. We're talking about U.S. data.
The U.S. CPI for February that came in at 2.8% less than expected.
Wow.
So markets are already reacting. We see the futures already up over 1% at this point on this good news. So I'm sure investors will be expecting, okay, it's maybe the dreaded R word.
The rate cut.
Yes. the U.S. Fed might be comfortable, with this. They still have inflation,
of course,
in the bag at this point.
Looking and they want to deal with it. Hopefully we'll see if they will have more rate cuts with this to change that decision, or they'll just decide to just...
Investors just want the rate cuts at this point. Thank you so much, Will, for giving us the details of what's playing out in most of these markets that we track. All right, to some stories now. We see Ghana's finance minister has disclosed to Parliament that the country has missed key performance indicators required for the upcoming 4th review of its International Monetary Fund supported program that's scheduled for April 2025. Perhaps more concerns in its revelations that all structural benchmarks due by end of December 2024 likely missed, suggesting a comprehensive failure to meet the reform commitments. All right, let's get a check on what's playing out in Europe now. We see the EU has announced retaliatory measures after Trump's administration's 25% tariffs on steel and aluminium took effect. Well, join us for more now. We have Chiponda Chimbelu. Great to have you, Chip.
Thanks. Nice to be here, Laddie.
Yeah, it's all about the tariff jitters at this point, but we're getting inflation numbers out of the U.S. showing positive numbers there. It's actually lower than expected. But let's talk about this EU retaliatory measures at this point. How much impact will the latest tariffs now? What do you know about these retaliatory measures, coming out of the EU?
Well, actually, Laddie, the EU has said it has retaliatory measures that will target up to 26 billion euros of US goods. And in a statement, European Commission President Ursula von der Leyen said that the European Union must act to protect consumers and business. Now, the EU will target steel and aluminum, in addition to textiles, leather goods, home appliances, and other goods as well. And the countermeasures take effect in two stages. That would be on April 1st for some of the goods that I just mentioned, and on April 13th for agricultural goods. So that will leave some time for Brussels and Washington to negotiate. And the EU's retaliatory tariffs could take effect next month. Actually, are not that new, Laddie, because they were implemented during President Trump's first term. And then we saw tariffs on several American goods, including bourbon whiskey, jeans, and Harley-Davidson motorcycles. So we'll have to wait and see to see which products exactly will be impacted going forward.
All right, so we'll definitely be watching out for all of those for the impact at this point. But how are European stocks, trading? Definitely we're seeing good news coming out from the U.S.
Well, European stocks are actually trading higher today as well, and that is largely because of news that Ukraine has accepted the US's proposal of a 30-day ceasefire with Russia. Now, the pan-European Euro Stoxx 600 is up around 1.1%, and it has regained some of the losses it made in Monday's trading session when it closed down 1.7%. And that was due to the tariffs on Canadian steel and aluminum products as well. Now, the US president did back down on those later on, reducing them to 25% from the 50% that he had said earlier. So while European stocks, though, are higher, it is obviously not quite a recovery. There's, of course, still lingering fear of an escalating tariff war that could sour the mood on European markets. And it will definitely temper any major investments in Europe. And of course, the latest tariffs could also affect European companies that produce goods in Canada, Mexico, and the United States, especially the auto industry.
All right, Chip, I guess we'll still have to watch out for most of these tariffs going forward. Well, thank you so much, Chipoda Chimbelu, for giving us the details.
Thanks, Laddie.
All right, to all the stories now. We see government officials and business leaders from the Democratic Republic of Congo and South Africa this week to explore investment opportunities between the two nations, hosted by the Africa Trade and Investment Council. A delegation of 16 officials and business leaders from the DRC will engage in key discussions, including meetings with South Africa's Department of Trade, Industry and Competition. Our South Africa correspondent, that's Innocent Somoza, reports now.
With a shared goal of strengthening economic ties, officials and business leaders from the Democratic Republic of the Congo are in South Africa for a series of high-level engagements. The delegation, hosted by the Africa Trade and Investment Council, are exploring investment opportunities across key sectors. Discussions here are focused on strategies to enhance trade partnerships and unlock new business opportunities.
The cooperation between DRC and South Africa in the general BNC framework is dated from 2004. Since 2004, we signed the General Cooperation Agreement, we signed the Economic Cooperation Agreement, and other sectorial agreement. But when we did the last assessment of the engagement between the two countries, we found out that so many projects have been identified.
South African officials says the discussions will help strengthen economic cooperation and address trade challenges between the two nations.
The project holistically is a multi-sectoral project. What we would like to do is fundamentally first develop underlying infrastructure. The project is a construction of roads, cities, and special economic zones. Within those special economic zones, we aim to have mineral beneficiation, agro-processing, component manufacturing, as well as heavy and light industrial manufacturing. So holistically, there are a lot of sectors that we're aiming to participate in.
Are there timelines into this project?
Definitely. We've currently finished pre-feasibility. We're going through the feasibility stage now. We are aligning policy in terms of the different government bodies. We're engaging with the political entities as well as the government entities in South Africa and the DRC.
Beyond formal meetings, business leaders from both countries are engaging in networking sessions aimed at fostering long-term partnerships. I had the opportunity to speak to some delegates here, and this is what they had to say.
So basically, it seems really important, and with what we are doing, the mission we have is to make a development of territories, so it should be interesting for both countries. It's not possible anyway.
While discussions continue, both governments remain optimistic that this visit will lay the foundation for stronger trade and investment relations between the two nations. From Pretoria, South Africa, Innocent Samos, Channels Television News.
All right, thank you so much, Innocent. Let's get a check on what's playing out with the markets now. We're seeing a dramatic change there for Bitcoin and most of the cryptocurrencies, with Ethereum up 0.87% on that softer than expected inflation data for the U.S. And we're seeing the markets already reacting, not wasting any time. Then we see some projections there from Bitwise. They say Bitcoin could hit a $50 trillion market cap despite Bitcoin's recent price downturn. The Bitwise CIO, Matt Hogan, remains optimistic, forecasting that its valuation could soar above $50 trillion in the long run. And we see JP Morgan, they've upped their recession odds to about 40%. That's most of the top headlines there in the market. So much playing out right now. We're seeing that inflation number, and investors are happy about that number right now. But let's bring in Emmanuel Jacobs now as a tech and blockchain YouTuber. Hello, Emmanuel.
Hello, Williams.
Yeah, it's great to have you, Emmanuel. So I'm sure you can see the reaction to that US CPI data. It almost seems the market has forgotten most of the losses made so far with Bitcoin and Ethereum.
Yes. Sorry, I didn't get that.
Yeah, I'm sure you're seeing what's playing out with the market right now. We're seeing the big bounce with Bitcoin, Ethereum, and I'm sure it's on the back of the US CPI data for February. How are you seeing sentiment right now?
All right. Currently we have like extreme fear in the market, and I think the extreme fear rate is currently about 19. Like a lot of retail traders are quite skeptical. If some people are not even sure if this is actually a bull market, or some people are like, maybe the bull market is over, and a lot of people have actually sold their barrels, and lots of people are not even thinking of maybe buying or trading cryptocurrencies at the moment.
Yeah, we see that sentiment happening, but we're also seeing reactions to the tariff jitters, and now we're seeing this inflation data. They seem happy right now, but according to you, some have sold their bags at this point and they're going on the sideline. Well, let's look at another aspect now of the cryptocurrency industry, Web3. We've seen most people come out to tout Web3 careers as where to go to, right now. How are you seeing the whole Web3 play, going in Nigeria?
All right. So in every industry, most of the people that make money from any industry are actually producers, people that are actually building something. And Web3 career is actually one of the aspects, or one of the vehicle wherein people in the crypto space could be able to make money without only depending on crypto trading. So a lot of people are actually not aware of this, because they just feel that crypto is just all about trading, and they only limit themselves to just being users on most of this platform without thinking of various aspects of trying to contribute, because it's actually those who are able to contribute to the space one way or the other are able to make something substantial, most especially in the current market situation like this, because people that are skilled enough in the cryptocurrency space, people that are currently building, people that have something to contribute to the space are currently making money, while people who are only dependent on maybe trading are kind of scared at the moment, and they are actually not making money at the moment. So Web3 careers is actually the way to go. Finding a way to do something in order to contribute to the space, to build something, to see how to be able to have a contribution. And definitely, since one is giving value, one is also expected to make money in return.
But I know Web3 has been described as the decentralized web, at this point. Talk to me about the kind of salary expectations, with those playing in a Web3 career.
Well, it's totally dependent on what area of maybe specialization, because we have a couple of careers, we have a couple of niche in the Web3 space, but I feel people in maybe community management could possibly earn something around maybe $500 to $1,000 on a monthly basis and even more. And when we want to talk about maybe influencers, content creators, programmers, blockchain developers, these ones are able to make in thousands of dollars every single month from the from Web3 careers.
Yeah, that's quite interesting, and those numbers sound really good. If you're playing in that segment, but we'll keep watching and see how the whole Web3 play goes in Nigeria and most of the other countries. Thank you so much, Emmanuel Jacobs, tech and blockchain influencer and YouTuber. Thank you.
All right, thank you for having me.
All right, there you have it. Inflation in the U.S. for February came out softer than expected. We're seeing most markets reacting right now. We'll give you a play of how the markets play out tomorrow. Thank you again for watching. I'm Lade Williams from Made the Team right here at Channels HQ. It's bye for now.